head to the markets now. Well, I hear the NGX has made another rebound, new level.
Well, definitely, I think we're hanging on to that 121,000 level now, and so we're not going anywhere. Even if we expect,
we can go to 122.
Well, yes, upward. Upward from here, upward from there.
Yeah,
we're not going backward.
Exactly.
Definitely, you got me there. Now, so let's see, major markets in Africa were mostly positive at intraday. We saw Nigeria's NGX trading higher at intraday at 0.22%. JSE in South Africa, however, was trading down 0.04%. But elsewhere, we say Egypt is back up at intraday 0.38%. But meanwhile, Nairobi Securities Exchange closed Friday's session in green territory. It's been back-to-back surge for that index. It was up 0.65% to close on Friday. More news coming in. The Nairobi Securities Exchange, as the NSE, has added over 800 billion shillings, Kenyan shillings, in its investor wealth in 2025, with the index rising up 30.5%. And this is continuing a 20-month rally that began in late 2023. Companies in the manufacturing sector in that country, Samir Africa and Captura Tea, have dominated the market activity in recent days, drawing investor interest, very strong interest, amid a broader uptrend. Well, let's go back to what's happening at the NGX and see what is happening there. Are we going to be sustaining this new level that we are seeing now, or are we going to see a pullback anytime soon? Now we are joined by Oluwatobi Adesonya, equity trader, NGX Securities Limited. Good afternoon, Oluwatobi.
Good afternoon, Will. Thank you so much for having me.
Toby, the market has kicked off the new week. Positive notes. This is what we hope for all the time. ASI is back in 121,000 level. Rebounded. Now, is the new resistance here at 121,300, which we've been cited by technical and analysts, and the support at 119K levels, is this here to stay?
So, like you said, we have seen the market, at the new resistance of 121 plus. So we can say we can say on the average. So that's like the new norm, because of course we have to back it up with reasons. So, we have, for example, we are starting the new half year, which is the H2 2025. So, it brings a sort of new air. So this is the period where investors and, portfolio managers, they would like to review what they've done so far in H1. And of course, if you look at H1 performance, at the beginning, it was not really too good, but towards Q2, so we could see the market's improved performance. So we can say, with new we are seeing profits. Yeah, we are seeing good returns on the stocks. It was around May that the ASI started returning double digits, and as of last week Friday, the returns was 17.55%. So these are things that investors will look at, planning into the H2 proper. So we can say it is a new level for us in the market. Yeah, and we have been seeing a lot of portfolio rebalancing. So we've been seeing market participation, both even from foreign investors and domestic investors. So we can say that level is here to stay to a large extent.
Okay, if it's here to stay, is this going to go up, continue to go up from there, or are we seeing any pullback to, say, levels not hoped for?
Okay, so regarding pullback, the only thing that might want to bring the pullback factor, could be, let's say, profit-taking activities, especially from people who had, gained tangible returns on their investment. But in as much as that might happen, we'll definitely see people want to position for Q2 results, because this is July, so we would start seeing Q2 results any moment from now. So for as long as there might be pullback in terms of profit-taking activities, we'll always be seeing people that are invested, that are interested in, coming on board with their investment.
Okay, speaking of profit taking, can you tell us about the activities going on at the NGX as we speak? What are some of the stocks investors are buying or fading at the moment?
So for now, we are seeing a lot of activities in the banking space. I could say, following the forbearance saga that we saw, last month. So, that even tells us how strong the sector is, because if it were to be maybe a different sector, to rebound might be difficult, but in less than a week or so. So, we have been seeing people react positively, especially in the banking sector. We saw the likes of, let's say, Zenith, I mean, for a while, Zenith has been around 40 levels, 45, 48. But even after the forbearance and they came out with that disclosure, so we have been seeing the stock rally. Not only Zenith, other banks, especially the tier one banks. So we have been seeing a lot of buying interest in them. And recently we saw GTCO also listing on the London Stock Exchange. I mean, they came out to announce. So we have been seeing a lot of positive sentiments in the banking space. And one thing that the forbearance really addressed that's kind of scare investors is regarding regarding stopping dividend payments, and to a large extent banks has come to address. And that's one thing that we should also look out for, because some banks would want to prove to investors that they are strong and they can still pay dividend. So we might be seeing interim dividend announcements from most of these banks. So that's why one can say to a large extent, the level that we are now will
Definitely
become the new norm, right? So just to reiterate, we are seeing a lot of interest in the banking space, and as well consumer goods sector, because you can see for H1 the sector really performed very well, very well. Coming from them being in the loss position all through, let's say, last year, and we have seen impressive Q1 results. So we are also expecting their Q2 results to be very, very good. So we can see banking, consumer goods. So we are seeing a lot of activities in that space, and as well we have been seeing activities in the healthcare space as well. The likes of Fitsin, although we can say that for Fitsin it has relaxed for a while. The likes of Maya, Nimet. So we can even say generally that investors are now being intentional about their decisions. That is looking out for companies, what they do, and their plan, for the medium to long term. So we have seen activities across banking, consumer goods, healthcare.
okay. So it's definitely sustained bullish sentiments. There's a good earnings result will definitely keep investors at their toes and definitely keep the market up. So how should we expect the market to trade this week?
So for this week, we would most likely see mixed performance. For last week, the markets closed in the red for about 2 out of the 5 sessions, and the remaining 3 sessions it was positive. So this week, it will most likely be mixed. The performance will most likely be mixed. So we would have maybe some days where it will close up, and some days it might close in red due to profit-taking activities. But generally, I'm expecting the market to be mixed this week.
Thank you so much, Oluwatobi Adesanya, equity trader at NGX Securities Limited, for joining us this afternoon.
Thank you so much for having me.